Well, here we're looking at the Dow Jones Industrial. We saw a really big move, 1,000 points to the downside, very, very big move. And you could see right off the bat, once that happened, you could see the buy programs really come in, and it starts to automatically start going through some buy programs. We really saw a very big move on a lot of our stocks that we were short on, and we did rather well overall. And this market will try to hold into this level near the 15,000. That would be where, if we see any further action, I'd be watching that range. But I'd watch this 15,550 too, 15,500 level. There's any big break there, I think we start to go back up into the 16,000, maybe even a little bit more as they try to bounce it back up. But I wouldn't get too enthusiastic about the rally here, as I think we start to see selling come back in again. This is a very dramatic corrective action, and I think we see some further action with it. So I'd be careful of testing that. As far as I was talking about our seminar that we were going to do, we're going to have to postpone that. We're not going to be able to do that just yet with this volatility with the marketplace. You need to kind of focus on that. But anyway, our apologies with that. We are really seeing a lot of our selections do rather well, because of this. We saw this kind of rolling over in the overall market, and we got positioned, of course, accordingly. So we're going to give this a little bit of time to kind of develop and continue to retest those lows again, and then we'll see where we are with some of the positions. But I still think we probably have further to go here as people start to get really concerned. And everybody's talking about China, and they're really concerned about what happened with China. And to me, they're really ignoring what's been going on in this marketplace. I mean, we really haven't seen any real upward mobility since March. So we've been running sideways for months. When you have about 5 months of sideways action, and all of a sudden you start to see them get taken out, it's a free fall kind of scenario. You don't have to have something. As people say, it always has to be something that triggers it. When you really work a lot of times with advanced analysis, you realize that that's less the case, and there's other things that kind of trigger it. But anyway, I'll be saving that for my book. Anyway, we see this real dramatic move here, and this is, I think, just going to continue. They'll try to rally it back. I wouldn't get too caught up in that, as I said. I couldn't believe it. I'm listening to the TV, which I really hate to do because it drives me crazy, because I start to yell at it, and my wife goes crazy saying that I'm yelling at the TV. But it's you get a lot of the times these analysts on the TV, and they're like, well, I'd be buying Netflix or Twitter or this. The average investor, first off, you're looking at Netflix is up and around the 90 range. Not only that, you're stopping a steam train, and so they think, well, if you drop 10 points and it comes back, so what? But that's the average investor can't allow that kind of thing to happen. They don't fade into these positions. They don't have a never-ending level of dollars to throw out their trade. They have to be right that the trade is going to start to rally from where they buy, not let me fade into a position. Anybody could tell you to buy stock, and when it's going down. Matter of fact, I kind of remember the other person talking about a stock. I'm not going to name it, but he was talking about it yesterday, and then you saw the big collapse with that today, and then so it was a buy yesterday, and now what is it, a better buy today? It's just perplexes me that it does, and a lot of times the justification for this to me is not as real. Like for example, if they're talking, for example, about China's economy is, it started slowing down, and this is the reason why it was, and some bad numbers here and there. Well, in actuality, they were talking about 7%, GDP, and then on the other hand, just prior to that, they devalued their currency. Well, that didn't cause the collapse. of them doing that. And not only that, they're a communist country. I hate to bring that news to everybody. It seems like everybody puts them on a pedestal as if they're not a communist country, but they're a communist country. So they have a different kind of policy and different kind of rules. So, we put them on this pedestal as if they're, a very free country, and they're not. They take the benefits of a democratic or capitalistic society and use it in their own methods. So you got to keep that in mind when you look at these kind of international kind of scenarios. To me, we knew in advance when prices broke this certain range, we were going to start to see a free fall, and that's exactly what happened. Whatever somebody said was the catalyst, we caught it a lot sooner than everybody else did. So anyway, I was pretty happy with our calling for this correction to the downside, and just be careful here trying to take any rallies. We're going to let our positions run for a little while to see if we see a retest. It makes sense even if this is kind of our wave 3, we see a little counter move. I don't think we're going to see a huge return back because I think people are pretty skittish about what just happened, and they're going to see what the fallout is going to happen. And I think a lot of this was already distribution, so I think we're going to see some further damage come in. I think they've been damaged very heavily, so it makes sense for us to stay positioned.